Good afternoon, everyone. Let's see, admit. Start a little early there. All right. Good afternoon, everyone. I'm Zach Myers with the Center for Dairy Excellence. Thank you for taking your time to join our Protecting Your Profits webinar today. If you have any questions, you can feel free to put them in the chat box, and I'll answer them either as I'm going when I see it, or after the presentation. If you're on the phone, I'll try to leave some information if you want to unmute yourself and ask a question. That will be fine as well at the end of the presentation. So my goal today, like always, is to provide an overview of the current dairy market and to review risk management opportunities. This is all public information, and while I may express some opinions, these are not recommendations. So with that, we'll just move on into it. So November milk production and cow numbers at 18.35 billion pounds. U.S. milk production was down slightly, about 0.4% year over year, after being up only about 0.1% in October. So over the last 2 or 3 months, milk production has stabilized in the U.S. and hasn't increased much, hasn't dropped much either. So U.S. cow numbers were down year over year for the second month in a row to 9.385 million. Ahead compared to last November's 9.432. However, for the 6th month in a row, there was a month-over-month reduction, with November cow numbers falling 10,000 head since October, and the U.S. cow herd has shrunk and a total of 122,000 head since May's high. There was a slight increase of 1/10 of a pound per day in milk production, but this, of course, was not enough to offset the drop in cow numbers to keep milk production across the country positive. The average U.S. cow produced about 73.6 pounds of milk per day this November. Pennsylvania cow numbers are down about 10,000 from last year, and November marked the first month this year to not maintain that 475,000 head. Milk output per cow in Pennsylvania was also down. It's down about a pound per cow per day, which is roughly equivalent to 64.9 pounds per day during the month of November. And as a result, Pennsylvania milk production this November was down about 29 million pounds to 800 million pounds compared to last November. The November dairy cow slaughter will be announced Thursday, so it's not, the updated numbers aren't available yet. Likewise, with the November dairy product stocks, that information is going to be released this afternoon, actually, with the 3 p.m. Dairy products report. So moving on to data that we do have, November dairy product prices. At $1.99 per pound, November butter price is 53 cents higher than last year and continues to be a significant discount compared to the international prices, with global dairy trade price at $2.94 and the EU price at $2.75. Cheese price is up 18 cents compared to last year and is also a discount compared to global dairy trade at $2.34 and 15 cents per pound higher than the EU, which is $1.71. And at $1.56, non-fat dry milk powder is 48 cents more than last year and is slightly lower than the global dairy price of $1.67, but 13 cents higher than the EU price of $1.43. The world milk supply is contracting, so international prices are expected to continue to move higher, which of course will make U.S. dairy products more attractive to the export market. Dairy product production. October butter production was down about 2.6 million pounds compared to last October to 159 million pounds. October cheese production was up 9.7 million pounds to about 1.15 billion pounds. And October powder production was down 16.5 million pounds compared to last year to 125 million pounds, representing an 11.7% drop. Moving on to October total dairy disappearance, which is the most recent disappearance numbers that have been released. Butter disappearance was down about 1.3% to 210 million pounds due to a 4% decrease in domestic use that overwhelmed increased butter exports. The international demand for butter is expected to remain strong due to that the shrinking world milk supplies, as I mentioned in the last on the last slide. At 459 million pounds, American cheese disappearance was down 4.1% because of decreased domestic disappearance that overwhelmed increased exports. Other style cheese exports are up 4% to 725 million pounds, and this was driven by an increase in both domestic use and exports. Milk powder disappearance was up 9.3% to 227 million pounds, driven by a nearly 100% increase in domestic use that offset a 12% decrease in exports. So I've mentioned in webinars previously that the U.S. exports most of its non-fat dry milk. So a 12% decrease in exports was pretty significant. And but it's good that we had the increased domestic use to offset that. Moving on to milk price, Class 3 milk futures for the next 12 months are up 77 cents compared to this time last month to average 19.63 based on yesterday's closing prices, December to the 21st. November Class 3 was the low, or December, excuse me, Class 3 was the low at 18.47 and reaches a high of 1996 in August before falling to the 1960s by November of next year. The current Class 3 12-month average price is $3.05 more than the 5-year average of which is $16.58. Class 4 and Class 3 prices continue to be, or actually inversed in November for the first time in a long time, and are expected to remain that way for the foreseeable future. Class 4 price for November is currently the lowest price for the next 12 months at $19.78 a hundredweight, and then trades in the range of $20.30 to $20.70 for the next 12 months. And that gives the Class 4 12-month average of $20.45 a hundredweight, which is $2.19 more than last month and $5.47 more than the 5-year average price of $14.98. So Class 4 is really high relative to the recent history. So moving on to exports. 186,085 metric tons of milk solids equivalent dairy products were exported. This is down about 1% from last October. But the value at $660 million is actually up 17% from last October. So shipping delays continue to hamper exports and are largely to blame for the slight year-over-year reduction in exports. And this, of course, is the second month in a row that has been the case. Cheese exports were actually up 44% year over year, and butter exports were up over 100% year over year, which was almost enough to offset the 12% reduction in powder exports that we talked about in a previous slide. So moving on to risk management. The October dairy margin coverage margin was announced at $8.54 a hundredweight after adjusting for the alfalfa hay price that was announced or made final last week or a couple weeks ago. This triggers a 96 cent per hundredweight indemnity at the 9.50 coverage, which is roughly equivalent to $750 per 1 million pounds of production history up to that 5 million Tier 1 cap. This increases the net benefit to $2.26 so far this year, or about $24,000 per 1 million pounds of production history up to that 5 million Tier 1 cap. So if a producer has 5 million pounds and caps out the Tier 1 coverage volume amount, then that's well over $100,000 that they've received this year for dairy margin coverage. So annually, that's like I said, $24,000 after adjusting for the hay price change, and a $2.26 net benefit so far, with 2 months still yet to be announced. The November margin will be announced next Thursday, December the 30th, after 3 p.m. The DMC decision tool has been updated and now projects margins as well as trigger prices. However, since the release of the finalization of the alfalfa hay price change, that part in their projections has not changed yet. Supplemental dairy margin coverage and 2022 dairy margin coverage enrollment is open now and will continue to be open until February 18th, 2022. So coming from that DMC decision tool, the black numbers are final, and then the 2 red numbers at the bottom are what's projected for November and December. So currently at $409 is the projected cost or payment for 1 million pounds, and $118 in December. So milk prices are expected to continue to get better, and feed prices have stabilized somewhat, and not increasing and deteriorating the margin as much as it was earlier this year. So moving on for projections for next year. So this is sort of a busy slide, but just draw your attention to the black numbers. That's sort of the most important, at least in my opinion, to look at to get an idea. But the black numbers there are represent margins that are less than the 950 and will trigger an indemnity. And so the current average margin using a blended hay price is $9.19 a hundredweight, as you can see there at the bottom. And this would trigger a gross indemnity of 31 cents a hundredweight, which equates to a net benefit of about 14 cents per hundredweight, or $1,400 per 1 million pounds of production history. So again, DMC and well, just to reiterate that that tool doesn't include the high quality hay price. It's a blended price. So those numbers in reality are probably in the neighborhood of 18, 20, 21 cents lower than what's listed on the projections. So DMC and supplemental DMC enrollment again is open at local FSA offices and will end February 18th, 2022. If you are planning on enrolling for or applying for supplemental dairy margin coverage, you'll need to call your local FSA office and make an appointment. Is the best way to go about it. Some FSA offices still aren't open to the public, only appointment by appointment, and you will need to bring along your final payroll stub for 2019 to prove that your 2019 production is greater than your current production history. And if there's any questions after we're done on dairy margin coverage or the changes, please don't hesitate to ask, and I'll try to answer them. So moving on to dairy revenue protection. The DRP prices shown here are based on yesterday's closing prices, December the 21st. 100% class 3, 95% price protected floors can be set from a low of $17.60 in the second quarter of 2023 to a high of $18.92 in the third quarter of next year, 2022. An average price floor of $18.20 per hundredweight can be set for these 5 quarters for an average of about 50 cents per hundredweight. The floor prices for each quarter are in the 60th to 100th percentile of their respective quarterly 5-year averages. So well above their 5-year average if you're wanting to look at DRP class 3. And on the class 4, 95%, 100%, 95% price protected policies can be purchased to set floors from a low of $17.58 in the second quarter of 2023 up to $19.53 in the second quarter of 2022. An average floor price across these 5 quarters can be set for $18.76. Average floor price is set at $18.76 a hundredweight, and this will the average price of about 46 cents per hundredweight. The class 4 price floors are all in the 100th percentile of their respective quarterly 5-year averages. So, which means that basically they're the highest they've been in 5 years. So, I know the premiums may look and sound relatively pricey, but these class 4 prices are really good, especially second quarter through fourth quarter of 2022. Which allows you to set floor prices, class floors of over $19 a hundredweight. I encourage you to talk to me or a dairy revenue protection crop insurance agent and see what their advice is on purchasing some protection if DMC doesn't adequately cover your cost of production. So just a couple of statistics from the Dairy Revenue Protection Program. Through 2022 crop year, 23.9 billion pounds of milk have been covered in the United States, with 2,100 policies sold, and no policies have been indemnified yet. In Pennsylvania, 317 million pounds of milk have been covered by 100 policies sold, and the report that I look at on the USDA webpage doesn't break it out by quarter, but I would assume that a lot of these, the increase over last month, which was pretty significant, are in these first 2 quarters that where the class 4 and class 3 prices can set a pretty high floor price. So just a quick update on the Pandemic Market Volatility Assistance Program, or PMVAP. The payments, for those payments, the agreement letters are being sent out as the information is generated and verified. Agreement letters are being sent out to milk handlers for them to then sign and return back to the AMS. Once the letters are signed and returned, then the money will be released to those milk handlers, and then the milk handler will have 30 days to distribute to eligible members. So we did have a dairy industry conference call yesterday with an AMS representative on the phone with us, and she said that farmers should receive payments sometime in the first quarter of 2022. And with that, I think that is it. The next Protecting Your Profits call or webinar will be January 26th, 2022 at 12 p.m. I'm in the process of finalizing a guest speaker. Hope to have in January have a 2022 market outlook presenter on the webinar with us to provide see what their opinion is on what's going to happen in 2022 as far as milk prices and everything goes there. So with that, are there any questions? All right. Well, I'm not seeing any. Emily, or have there been any questions to come through the live streams?
No, not that I've seen.
Okay. Well, again, thank you for joining our conference call or our webinar today. I appreciate you taking time to join me today, and I hope that you have a very Merry Christmas and Happy Holidays and a good New Year. Thank you.